I start the newsletter with a picture of a loaf of bread, and I include the idiom baked into the price, which basically means that all the current news and expectations for the future are already baked into the price. The market overall, on average over the long term, moves higher, but it moves up and down according to investor reaction to the news that comes out. If it's better than expected, what we find is the market will move higher, and if it's lower than expected, or worse than expected on news, then it tends to move lower. This graph shows the City Economic Surprise Index, which means that when the economic reports come out, if they're more positive than negative, we find this rising line here that taking place. And if they're more negative, then we find a declining line in the Economic Surprise Index. And it's actually a diffusion index with 0 here. So basically anything above this line here, 0, basically says there's more positives than negatives, etc. And you can see the reaction to the S&P 500. It generally follows this trend. It's not a timing tool at all, but you can see as the economic surprises become more positive, the S&P 500 generally rises. Sometimes there's a lag, and then you can see with the S&P 500 moving lower when the economic surprises become more negative. But it doesn't account for a whole bunch of things like earnings as an example in the economic surprise. And it doesn't account for tariffs, which is really the key driver of the market right now on what's happening. And so I've included this picture here. The top one here is the tariffs from the US on China. You can see all the different stages here that have gone on here, back and forth, back and forth. And that does not include Trump making a lot of comments and other members of the White House administration saying that, yes, the tariff should be this level, or I feel they should be this level, or back and forth, and et cetera, et cetera. So there's been a lot of, let's say, confusion with a whole bunch of numbers coming out. And here down below we have China's reaction to it. We try to move somewhat in lockstep that's taken place. They tend to lag a little bit, try and see if the U.S. would pull off a little bit. But lots of movement as far as the tariffs go with different rates. Currently, right now, what we're seeing is a 90-day pause that's taken place, except for what that means, though, is the tariffs from the U.S. to China have gone down from 145% to 30%, still really high. And in China, they've gone from 125% to 10%. So the tariffs are still unacceptably high, but nevertheless, investors have said, well, we like what's going on because this is at least a movement in the right direction. But I put this little picture in here because trying to monitor what's happening with the tariffs has been like somebody moving the thermostat up and down in the house. It goes up, down, and it's been a very difficult situation as this has happened. There seems to be an overall consensus that the situation is getting better. But I do think that we could see overly optimistic expectations on where we're going to end up. What's happened essentially is the tariffs became really high. They basically became an embargo on the China as far as 145% goes. And now they've come down to 30%. And investors are going, well, that's great. That's a huge, huge benefit. Well, did it matter if they're 145% or 1,000%? It's basically an embargo. But I think the investors here really have to have this expectation because the pattern has been high tariffs and then lower them, that the tariffs are probably going to end up in some sort of single-digit range. I'm not convinced that's going to take place here, but that's what's being baked into the price right now. It's very difficult to determine that. I haven't seen any surveys as far as what the expectations are, but that's it. The impression I'm getting here is that overall, the consensus is that we're probably going to see much lower tariffs in the end, some nominal amounts, some single digits. The most important word in the dictionary, according to Trump, is tariffs. I think we're going to have to end up with some tariffs. The U.S. has negotiated a deal with the U.K., but you should take that with a grain of salt because that was probably the easiest country in the world to negotiate tariffs with. Why? The U.S. actually had a trade surplus with the U.K., so it's a very, very different ballgame right now compared to the other countries. So this is still going to be a little bit of a longer process. There will be more deals announced as well. But we're going to end up with some tariffs. Now, the world was already in some sort of economic slowdown before all this happened. Germany has been slowing down over year after year here in recession. Europe overall has been a little bit of an economic basket case. Japan showing increasing signs of slowdown. Canada, we just saw a 6.9% rate of unemployment. That could move higher as well. The U.S. is also showing signs of slowdown. That's separate from the tariffs. Now, what's happened with the tariffs, because there has been tariffs on here for a month, and we still have tariffs, that hasn't worked its way through the system yet. I do want to say that anecdotal evidence says that with the 30% tariffs on China, we have seen the Chinese factories actually start up again starting to ship goods to the U.S. So we could have a flurry of economic activity because the U.S. the companies don't want to have higher tariffs possibly down the road, which is possible here. But overall, I would say that the expectations are too optimistic around tariffs. We're probably not going to come up with any more news here. Maybe there'll be a few other countries with a memorandum of understanding what the tariffs should be. There'll be some positive news here, but overall, there's still going to be tariffs down the road. And yes, it is exciting that they have been decreasing, but I don't think they're going away here. And other issues are going to come to the forefront, especially now that tariffs are sort of on the background because there's not a lot of talk of here. So we'll have to watch what happens with some of the economic reports. I think that's going to become more important as well. But overall, I think there's more downside risk with the tariffs than upside potential here, even if there are a few announcements being made that there are some settlements. Okay, so I want to talk about some of the seasonal opportunities here, some of the key sectors in the market and what's taking place. If we take a look at what's taking place with gold as an example, which is not in a strong seasonal period. It finished its strong seasonal period already and has another one coming up. But this is we're actually in the weaker time period for gold. And but it is something in the news a lot. There has been a lot of articles written about it and investors are interested in it. So I thought I would cover what I think is going on here. First of all, I want to say that here's gold on the top here. If you take a look here, you can see gold is still in a positive trend up here on an absolute basis relative to the S&P 500, which is not, I think, a key measurement. One's a commodity, one's a stock market, but we have seen that actually pull back here a little bit for gold. And we have seen a couple of down days for gold recently as well. And I do want to point out that June, on a median basis of long term, tends to be the worst month of the year for gold. So May and June tend to be weaker months of the year for gold. And investors should be conscious of that. I mean, sure, it could do well in this time period, but we are starting to see a little bit of a pullback in this weaker time period. But there could be opportunity here because the next strong seasonal period for gold starts early in July and runs really into early October. But with this June here being one of the weaker months, we can see a lot of volatility in gold. And if we do see gold being oversold, we could see the bottom actually being put in for gold in June ahead of a strong seasonal period. So something to watch out for where we could see an opportunity developing there. And at the end of April, I did a short video on gold, who's buying gold, what's been driving the price, and I talked about the Barron's cover on gold as well. And if you click on the picture here in the newsletter, it'll actually take you to the video. There's also the reference here as well. Now, I just want to put a little shout out here. If you could subscribe to my YouTube channel as well, that would be definitely appreciated. Healthcare is another sector here, and it can perform well in May because May is the shoulder season in the 6-month periods. We're just finishing up the strong seasonal period for the market and going into the weaker seasonal period. May tends to perform well, but it hasn't been. If you take a look here down this bottom panel here using XLB, you can see here at the beginning of the year, healthcare actually outperformed the S&P 500, but more recently it has been breaking that trend and has broken below its upward trend line. So it's a negative pattern here. On an absolute basis, look at this. We got a left shoulder, right? So there's the shoulder. Here's the head up here. So we got the shoulder, the head, and then we have a right shoulder here, and we've broken below that support line, which is in this case called the neckline. This is a bearish development. So overall, this is not a good picture for the healthcare sector. Now, just the other day, Trump came out and announced that he was going to reduce the cost of prescription drugs by 80% for Americans. And Americans pay the most for any of the prescription drugs around the world by multiples. It's absolutely incredible. It's always baffled me how presidents in the past have all left this alone. I mean, it's just not right for the American people. It makes absolutely no sense at all. But this is a weight on the healthcare sector as well. So we got a lot of negativity, negative things going on for the healthcare sector. We'll probably see it not perform well coming up shortly. But let's talk about a subsector of that. Let's talk about biotech. The biotech sector has a strong seasonal period from June 23rd into mid-September, September 13th. And if we take a look, the sector hasn't performed well at all, really. If you take a look and go back in 2024, as an example, relative to the S&P 500, which is this bottom panel, look, it's underperformed all the way. But if you take a look at the strong seasonal period from June 23rd until September 13th, you do find that period here where it did outperform the S&P 500. So if we might see the same opportunity, especially if we do see the sector becoming oversold and the time leading up to the start of the strong seasonal period. So something to watch out for. We could see another opportunity developing here. Even though the biotech sector may actually continue to go lower, if it does become oversold, it could actually present a good opportunity, particularly if we start to see the earnings season do quite well, which would help to provide a boost for this. I want to show you the most positive month of the year for the biotech sector is July. If there's one month of the year where you'd say, hey, I want to be in the biotech sector, especially relative to the S&P 500 on a seasonal basis, this is it. Canadian banks, if I want to take a look at this pattern down here, the Canadian banks relative to the S&P 500, or I should say the TSX, S&P TSX Composite Index. There's been two periods, one of consolidation back in 2024. Then we saw this outperformance around their earnings in August. And then once again, we've been following this consolidation again. We're at the top trend channel here. This is earnings month for banks coming up. Canadian banks, they start to release their earnings very shortly. And it's interesting that we're at this top of this level here. Now, banks tend to perform well in a market where if it initially turns down, because of their high dividends, a lot of Canadian investors will run to the Canadian banks. They'll say, well, I'm going to move to the banks because I'm going to get paid to wait. But if we see the market turn down and there becomes real concerns about the economy, that's when Canadian banks tend to underperform because they are substantially linked to the economy. And we'll have to see what happens with the earnings coming out later on this month. Now, on a seasonal basis, June tends to be a weaker month for the Canadian banks. I don't have the chart here. You have to go to my website, alphamountain.com. And go to the graph section, the last tab, and I've just put up a few key sectors of the market in Canada and the US and commodities, continually to build that out over time, but you can actually take a look at some of the stats on that. I want to show you this graph here. This is the Canadian dollar versus US dollar. To start with, though, I want to take a look at the US dollar versus world currencies. 2025, right here, beginning line, almost. And if we take a look, we can see that the US dollar has underperformed the world currencies in 2025, and particularly in April. Now, what happened in April was a real anomaly to some investors, but let's talk about what took place. So we saw foreign investors selling off their US assets in this uncertain economic environment around tariffs. So they were selling their tech stocks, they're selling their government bonds, and they were flipping the currency into their own currency and remitting it back home, which is a downward pressure on the US dollar. And because those US dollars are being flipped into another currency and taken away. So we saw that happen even when risk off was increasing. And yes, there's a lot of calls on the internet for the US dollar to head lower a lot and all that sort of stuff. But you have to watch what happens on that, because yes, the Trump administration would like a lower US dollar, but there's a lot of counterplay movements here. If we take a look at the Canadian dollar versus US dollar, here you can see when the US dollar was actually heading lower versus world currencies, the Canadian dollar was actually flat relative to the US dollar, which means it wasn't doing well. Then we saw this strong outperformance back up to this line here, which was a really resistance line. It went just above that. Here we are, and it looks like it's starting to head lower here. And this is, we're starting to see the US dollar versus world currency starting to show a little bit of stabilization here. On a seasonal basis, relative to the Canadian dollar, the US dollar tends to slightly outperform the Canadian dollar over the next month and a half or so coming into the end of June. So we might actually see more downward movement in the Canadian dollar over the next little while here. If we take a look at utilities here, utilities can't perform well at this time of the year. They maintain their strong performance relative to the S&P 500, But they're really on that trend line. You be careful because we could see that breakdown there. And if that does happen, that may be a trigger to actually exit the sector. Right now, we're back up to the resistance line here. We're going to have to see if that utility sector could make it above here. If it does, and on strong volume, that would be a positive. But if it starts to turn lower and we start to see a breakdown here, that could be a little bit of a negative. So the utilities, they're really interesting over the last year because, yes, they are a defensive sector, but they're really a play on the data centers and economic growth as well, more than they've been in the past. So they can have some bigger movements than they've had in the past. So a little more volatile, their beta is higher as well. But just watch out for those two things. Consumer staples, here we're getting back up to the resistance line, top of the channel right there. We have seen a breakdown, the sector breakdown relative to the S&P 500. And when the S&P 500 is rallying so strongly, investors are saying, well, do I really want to be in some of those consumer staple defensive stocks, especially at really high prices? And we've seen them being more interested in growth sectors versus consumer staples, which is typically what happens. Now, the consumer staples sector tends to perform well in that shoulder season between the unfavorable 6 months or the favorable 6 months to the unfavorable 6 months. But it looks like it is starting to show some weakness here. Even if the market goes down, we could see the consumer staple sector underperform. So right now, it's not that attractive of a sector. Government bonds, U.S. government bonds perform well on a seasonal basis from early May to early October. The sweet spot for that trade really starts in July. Government bonds, they're positive for 2025. I know we've had a lot of volatility. I just talked a little bit about what happened in April with the US dollar, same with the US government bonds as well. So we did see that take place. It does look like they are starting to stabilize here a little bit. We'll have to see if that does happen. We are in the strongest seasonal period for government bonds. If we do see more economic slowdown of growth taking place, that could be reflected in lowering yields and increasing government bond prices. Right now, the big concern is inflation. We just saw that inflation report come out the other day where inflation was slightly better than expected. So we're still waiting for more clarity on the data here. But with everything that's going on with slowdowns basically around the world and a whole bunch of this, particularly in the softer data, and then we're throwing tariffs on top of that, I don't see room for huge growth opportunities in the short term. I mean, we can argue about the long term, but in the short term, over the next few months or next year or so, it's going to be very difficult. So we could actually start to see that being baked into the price. I think investors really will pivot on this with some of the inflation reports. So if we see more inflation reports coming out lower, there'll be the expectation that the Federal Reserve will cut rates, and that will help to push the yields down, which should favor bonds as well. If we take a look here, I've got a couple of rants here, and without being political, I really try and stay away from that. Here's Trump, and I basically say that Trump won the Canadian election, at least in his mind. Let me explain. Why would Trump want Mark Carney to win the Canadian election? Why not Poilievre? He's more like him or something, which is not true at all, but somehow the media has created that impression. But nevertheless, we saw Trump support Mark Carney before the election and after the election as well. So why? And I think really it comes down to more of a tactical move. If you take a look what's happening out west with Canada, with Alberta and Saskatchewan, I think Trump doesn't want Canada. He keeps calling Canada the 51st state. He does not want Canada. I've said this repeatedly. Yeah, but he would like the oil, he would like the gas, he would like the uranium and the wheat. He would love that. And maybe he'd like some territories up north to get access to the north through further access beyond Alaska as well. But he's really after the resources. And if you take a look here with the current government in power for Canada, there's more likelihood there's going to be dissension from the West, and that we're seeing that actually play out. And I think Trump's hoping that there'll be some sort of splintering of Canada down the road. And I think that's probably why he went for that. My take on it is that right now we are seeing an increase in calls for succession from Alberta and Saskatchewan. I talk about the reasons why that's taken place, why they feel that's maybe they should succeed from Canada. My take on the situation is that Alberta and Saskatchewan will probably have a referendum vote in 2026. I think it will fail, by the way. And the reason is that Albertans and the people in Saskatchewan want to stay in Canada overall. They really want the federal government to work with them and help support their oil and gas industry and their resources as well. But they would prefer to stay in Canada. I think down the road, probably in 3 years' time, there'll be another vote if the federal government doesn't work closely with them in helping support their provinces. And there'll be another referendum, and that's where we could start to see some problems. And I'm not going to try and talk about what could happen and all of that, but I think that's in Trump's mind. He sees ultimately that that has a greater potential with Mark Carney in place. That's why he supported him, and in his mind, he won the election. In my next rant, I talk about Trump firing Powell. Trump has called a number of times, said, well, I could fire Powell if I want to. And in this rant, I actually said, and he's not going to fire Powell, by the way. So Powell's term as the chairperson expires on May 2026. And so that's not that far away. And it's a process to get somebody else in place. And there's a real risk that if Trump actually goes and tries to fire Powell, it would go to the Supreme Court because it has to be done for cause, etc. And let's say that Trump loses, that's a real black mark on the administration. There's been some other cases, but around different issues, which I won't get into, but this is much, much bigger from an international stage. And I think that if Trump wins, even if he won, I still think it'd be a black mark on the administration, that the firing of Powell. So I don't think it makes any sense, given that he's only in place for another year, and it's going to be a little bit of a process to elect somebody new, etc. It doesn't make any sense. However, we could end up in this really funny situation. Powell is the chairperson of the Federal Reserve until May 2026. He's a governor until 2028. So we could actually see, now I'm just going to play out this scenario just for fun, that Trump could fire Powell from the chair, and Powell would try and stay on as a governor of the Federal Reserve. Now, the scholars are going back and forth whether that could take place or not. But I have this example here, if we take a look here, and this goes back to Truman, where Eccles was the Federal Reserve chairperson at the time, and Truman refused to reappoint Eccles. And so he went through and fought him, and it caused this big, huge mess. So there is a little bit of a precedent that takes place. I put a picture of the Federal Reserve building here. And the reason I did that is because the name of the Federal Reserve building is Eccles. It's the Eccles building. So Eccles has some notoriety of standing up to the administration in the Federal Reserve circles. Most people don't know the Federal Reserve is not it's a privately owned institution by the big banks. They think it's part of the government. It's not. So, but anyhow, so maybe Powell would, if this played out that way, he would try and also get some notoriety as well. I don't think so. In the end, I think that Trump's actually going to probably start praising Powell coming up. He's going to make a first interest rate cuts, and yes, he's okay, that's good. And we'll see Powell leave in May 2026. But I just want to walk through this scenario. Thanks for joining me on this video tour of my newsletter as well. Don't forget to subscribe to the YouTube channel as well. Thank you very much.